welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Srishti Sharma and with me back is Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. So do get ready for that. But before we start taking your queries, let's have a look at what the markets are up to. So Cheryl, seems like a good day for the Indian markets. At least the broader markets are also supportive. And today is the monthly options expiry.
Exactly, and you said it, Srishti. Today is the monthly options expiry, and going by the history of the way how the markets have fared on the expiry day, you cannot actually extrapolate which direction. But let's take a look at what Nifty Bank is doing, because that one is outperforming the benchmark indices. 0.8% uptick coming in for Nifty Bank as we speak. 290 points uptick for that one. The spotlight is definitely on the Adani Group companies, the news reports, and therefore thereby the clarification coming in, refuting all of those allegations. And you can see what the Adani Group stocks are doing right now. Adani Enterprises top gainer on the Nifty, 7.8% uptick coming in for that one, 5.3% uptick coming in for Adani Ports. These are the top two gainers on the Nifty, followed by Hero MotoCorp, Eicher, Bajaj Finance, as well as M&M. So you have the auto pack that are actually holding on to good gains, because even Tata Motors is among the top 10 gainers on the Nifty as we speak. But on the flip side, you have UPL that's down about 1.2%. Reliance Industries is down about 1% in trade. So that one is actually stopping the markets from moving much more higher than is expected. So Reliance Industries down 1%. You also have BPCL, Asian Paints, Infosys, all of them seeing a decline in today's trading session. However, if you look at the advance decline ratio, still in the favor of the advances. So fingers crossed that we will hopefully take this to the close at 3:30, and we will manage to end in the positive territory. Talking about the sectoral indices, IT index is the only one, or rather Nifty Energy Index is the only one that is in the negative territory. Apart from them, all of them are gaining in trade, with metal, media and PSU bank sectors seeing the top gains on today's trading session. But definitely the spotlight will be on Vedanta in today's trading session, isn't it, Srishti?
Well, yes, absolutely, because Vedanta has had a good record in terms of dividend recently, but currently a desperation is witnessed in the promoter side, which is resulting in a large part of the cash moving to the dividend side, and those are the words coming from Nikunj Dalmia, Managing Editor, ET Now and ET Now Swadesh. Let's listen in to his take on Vedanta.
One of those, mystery companies in terms of capital allocation. Here you can clearly make out that there is a real desperation by the promoter, because the promoter has got debt obligations which they really need to be fulfilled. And in that process, large part of the company now, large part of the cash is now going to be moving in part of dividend. Now, last couple of years, Vedanta has had a strong dividend history. But last couple of years, commodity markets also have been in a bull run. If commodity markets are not in this kind of a bull run, and given that Vedanta is there in oil, Vedanta is in metals, Vedanta is there in both industrial and non-industrial metals, if the cycle is not that favorable, what happens to the dividend? What happens to cash flow? If such a large dividend payout, which has happened, and now the total dividend stands at about 100 rupees for FY22, FY23. What happens to the future capex, cash flows, if the cash flows are not strong? And see, giving this kind of a dividend, at least now that dividend is taxable at the end of the shareholder or receiver, may not be the most futile, may not be the best idea in order to really generate wealth, even for minority shareholders. So I don't think, because there is a fat dividend, the stock in a sense will get re-rated because of this. Of course, the price adjustment will happen because of the dividend payout. But what happens after that? What happens to FY24? What happens to FY25? Imagine if the commodity cycle is not that favorable. That is something which is worth reconsidering.
All right, that's the take coming in from managing editor of ET Now and ET Now Swadesh, Nikunj Dalmia, on Vedanta. But to get you the new space and why Vedanta is moving the way it is, because it has declared a fifth interim dividend of around 20.5 rupees per share for the current financial year, and the dividend will amount to over 7,000 crore rupees. My colleague Ashesha is here with all the details. Ashesha, fill us in. What exactly is the news flow with regards to Vedanta, and how does this impact the stock?
Yes, absolutely. So Vedanta has declared fifth interim dividend for the current financial year to the tune of 20.5 rupees per share, which at the current market price entails a dividend yield of about 7.5%. This will entail an outflow of about 7,621 crores for the company. Remember, for the full financial year, Vedanta has now declared a total dividend of 101.5 rupees per share, which is much more than the total dividend that the company had declared in the previous financial year, which stood at about 45 rupees per share. Remember, this will help Vedanta Resources repay its debt obligations, which has been a concern over the last couple of months. Vedanta Resources holds about 69.7% stake in the company, and the company will receive about 5,300 crores from the fifth interim dividend that Vedanta has repaid. Remember, Vedanta Resources had plans of reducing debt by $4 billion over a period of 3 years, and it has already repaid $2 billion in the first year itself, that is in the current financial year FY 22-23. The company has also reiterated that it will continue deleveraging. Important to note that company now has a total liability of about 7.7 billion US dollars, and out of that it has maturities to the tune of 3 billion US dollars in FY 24 itself. Apart from this, the CFO of the company has also resigned. Mr. Ajay Goel has resigned from the post of acting MD and CEO of the company. This will be effective from 9th of April, and the company has said that it will be announcing the details of the successor in the due course. Today, of course, the stock will be in focus because the company has declared fifth interim dividend to the tune of 20.5 rupees per share.
Well, thank you so much, Ashesha, for getting us all those details. So that was the news flow on Vedanta, as well as you also heard the editor's take coming in on this particular counter. But let's now move forward and connect with our experts. And on to the show today, we have Hemen Kapadia, as well as we have Saurabh Jain joining us. A very good morning, both of you gentlemen. Hemen, firstly, let me come to you. We heard what's the news flow surrounding this one and what the editor feels and has a view on Vedanta. But purely on the technical front, today the stock is seen to be up by 2% and recently saw a good support from its 200-day moving average. So any trading opportunities that you are spotting on Vedanta right now?
A very good morning to you. Thank you for having me on the show. Frankly speaking, Vedanta has been range bound for some time now. Obviously, the dividend has infused life in the stock movement. This is the fifth weekend counting, and we have after today one more trading session of the week left. So 5 weeks and counting. And frankly speaking, we haven't gone anywhere. There is a supply line coming right from the high of 338. I believe at 281 is a supply line level. So yes, if you were to take a trade, I believe you can take a trade now, but then you would have to keep a stop loss at 267. Or if you want to play it safe, you can wait for a breakout above closing about 281, then keep a stop loss at 274 and go long. But yeah, it seems to be turning just a wee bit positive. Big volume spike, levels have held. So frankly speaking, the setup seems promising, but action, we need follow-up action about 281, honestly.
All right, so that's a take coming in from Hemen on Vedanta. Very good morning to you, Hemen, as well as Saurabh. Thank you so much for joining us on the show. And Saurabh, you heard Hemen's take coming in on the technical front for Vedanta. But fundamentally, where is Vedanta and where does Vedanta lie? Because you have a lot of conflicting news reports coming day in and day out about Vedanta. How should viewers or investors take a look at this particular counter while making an investment bet for the longer term?
Hi, good morning. See, there are serious concerns coming up for the refinancing of the for the debt by the holding company. I mean, given the tight liquidity condition, high interest rate environment, the holding company is finding difficult for the to refinance its debt. Moreover, they have huge reliance on the dividends from its subsidiaries, and which would have a negative impact on their capex plans also. So, though the management has allayed concerns that they would be able to reduce, take down debt to zero in the medium term, but I think it is very difficult environment for the company. And moreover, if you look at the global economics, I mean, the US, we are talking about the recession. Europe, we are talking about the recession. China has opened up, but it will take some 2-3 quarters to get things streamlined. I mean, to come on the full swing. So there is a serious amount of pressure on the metal side also. You never know how the metal companies would find their earnings going in the next fiscal. So I think it is better to avoid investing in the metal counter, especially Vedanta, when the balance sheet is full of debt. holding company, and there are serious concerns with respect to how the debt will get reduced.
So that's the take coming in from both of our experts, especially on Vedanta Resources, where Saurabh is of the view that you should actually wait on the sidelines when it comes to investing in metal counters, especially Vedanta. But on that note, we slip into a break in this edition of Buy Now, Sell Now. When we come back, we'll start taking all of your stock-related queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. You can write to us on the WhatsApp number that's flashing on the top of your screen, or you can connect to us on Twitter or Facebook. We are live on those platforms as well. Do mention your name each time you write a message to us, because there is no other way how we'll know who's actually writing to us. Do mention the stock name that you're looking to invest. If you've already invested in the stock, then mention your buy price, the quantity, as well as your time horizon. That will help our experts help you better. And today, on to the experts, we have Hemain Kapadia as well as Saurabh Jain on the show. Good morning once again to both of you all. And Saurabh, before I start taking all the questions, let me ask you the question as to what should retail investors do in order to make sure that their wealth is protected, given the fact that we've only seen volatility since the start of the year 2023.
2023 is going to be difficult year to make money. I mean, the cost of money is still going up, and it is expected to remain high this year also, because inflation is still a trouble. We are yet to see any kind of dip in the growth, and then only we can expect central banker to somber their note. In this environment, I think high dividend paying companies, dividend yield stocks would be better to invest. Apart from that, I am expecting private sector bank, capital goods, hotels. These are a few of the sectors which are likely to perform better and outperform the broader markets. So I would recommend to invest in the large cap in the space, and stay put, stay
invested, and in this environment you can actually look out for some dividend plays into the markets. That's the advice coming in for all our retail investors. But let's move on and kickstart taking all your stock related queries. And the first question that I have is coming from Bablani from Mumbai, and though this question was from Kunal, but he's not there onto the show. So Hemain, I'll take it from you. He's holding 500 shares of GSFC from a price of 126 rupees. And the other stock he's holding is 500 quantity of Union Bank from a price of 64 rupees. Your advice on both of these counters?
Shishri, frankly speaking, GSFC has been in a corrective phase some time now. And I don't think, I believe the correction will not end in a hurry. This calendar year, we made a high of around 198. I don't think this high is going to be crossed in this calendar year. Very strong support at 115 and 107. So he can hold, assuming he's got a longer term point of view. But yeah, he's going to go nowhere, and further downside seems possible. One has to keep in a little bit of the backdrop. The stock has moved from 30 to 198.80. So if it's a multi-bagger, I mean, a year and a half of consolidation is needed, and that's what is happening. The other stock is Union Bank of India that you mentioned. Okay, many of the PSU banks are showing resilience, and Union Bank is no different. I believe support comes in at 60. Very strong support comes in at 54. 55-day exponential moving average at 58.5. Needs to hold. Downside currently seems limited. We've been in a corrective phase for this is the fourth month in a row, and I believe the downside is sort of petering off. Recovery is on the anvil. Close above 67 should trigger off a bounce from here.
All right, the next one is coming in from Chitra. She's writing to us from Kuwait, and she's holding a host of banking counters. Saurabh, Bank of Maharashtra, IOB, Central Bank, and PNB are the banks that she's holding, about 14,000 shares of cumulatively of all of these. And she's saying that she's making profit in excess of about 70%. So now she wants to know, what should she do? Book profits, exit out of these names, or is there some more scope of run-up left in the private banking space versus these PSU names?
See, out of the four banking you named, I think the stronger balance sheet is of only Bank of Maharashtra. she is making 70% kind of a gain. So I would recommend her to switch money from the table. I think it is better to switch to the private sector, bigger names like ICICI, Kotak, or Axis for that matter. I think PSU as a space will not get re-rated the kind of re-rating we saw in 2022. Going forward, I think there will be pressure, there will be competition for PSUs, and the competition would be higher for the banks which have high cost of funds. And going forward, there is also expectation of a drought like kind of a situation, which again may put pressure on the PSUs. So I would recommend to take money of the from the table and put money on the private sector banks, like the names we have talked about in the show.
Okay, so that's the advice coming in when you're looking to invest in banking space. But the next question is coming from Rajesh Maheshwari, and Hemen. He's holding 100 shares of GNFC from a price of 619. Though his investment horizon is for the short to medium term, what will be your advice? Is that a hold or an average? If average, then at what price he should try to look into that?
Frankly speaking, just a little bit of friendly advice. If you're a short-term investor, you borrowed at 690, you need to keep a 3 to 5, max 7% stop loss. You cannot afford to let your cost of 690 and you see the stock at 490. I think you need to be slightly more proactive with your risk management. Having said that, 507 was support. We sliced through that. The stock seemed to be stabilizing. The weekly picture was looking promising. Everything has gone for a toss, and if we end where we end today, it's a downward bar reversal on the monthly chart. Next level comes around 4. So one, there's no rush to buy. It's going to take some time, so one can wait a bit. I suggest if you can send in a query again a couple of weeks down the line, because there aren't any technical parameters right now which suggest a turnaround or an immediate positive thing. So one needs to wait. It's going to be a long haul.
Right, so that's the take coming in from GNFC. Moving on, Girish Vardakar is writing to us, and he has a query on HDFC Life. He has about 1,050 shares of HDFC Life, which he purchased many years ago at an average price of 350 rupees per share. He wants to know whether it makes sense for him to top up on this particular holding or look to book out of this one altogether. What's your take on HDFC Life, Saurabh? What should Girish do with his holding right now? Book out profits or continue to hold on or add some more?
See, I would recommend to book profit from the table. I think it is better to book profits. What I feel is that going forward, for all the insurance company, the business would be little difficult given the fact that the new tax regime has been come into default, and in 2-3 years the old tax regime will be phased out. Lot of money people do invest to save tax on the ATC side. And moreover, I think in the next 2-3 years there will be there will be a greater shift to the pure protection plans rather than the traditional plans, which will again be putting pressure on these companies' profitability and margins. So my take would be it is better to exit HDFC Life.
Okay, moving on to the next one. The question is from Deepak, and Hemen, he's holding 50 shares of Voltas from a price of 1,000 rupees. The stock has seen a good up move, but since the start of this month seemed to be drifting lower. So is that a hold or sell coming in at this point in time?
I'd say keeping a slightly shorter term view in place, Rishti. I'd say keep a stop loss at closing stop loss at 800. We've been down for 5 weeks. Bounces could be coming just around the corner. So keeping a short term view in mind, hold with the stop loss at 800. The bigger picture seems to be trying to improve, but doesn't look extremely enticing. So hold as of now with stop loss at 800.
Okay, so that's the advice coming in on Voltas. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back, and we'll be taking more of your stock-related queries. So stay tuned. Welcome back to Buy Now, Sell Now, a show where we get you answers on all your stock-related queries from our experts. And today we have Saurabh as well as Hemen onto the show. And taking the next query that I have is coming from Hitesh. And Saurabh, let me take it up from you because he's looking to invest into two private banking names, that is HDFC Bank as well as Kotak Mahindra Bank. His investment horizon is for the long term. What could be the good entry points for him?
See, it is very difficult for me to give entry points, but overall, I think the both banks are strong. They have strong liability franchise with good net interest margin, and they are expected to outpace the industry average growth. This year, I think there will be a huge competition coming from the bigger banks for the to the smaller banks, and they would take business from the smaller ones. Apart from these HDFC and Kotak, I think ICICI and ICICI Bank and Axis can also be looked upon. So I would recommend to invest in any of these four banks for the long-term perspective.
All right, that's the take coming in on which banks that you can look at in the private sector space and the large cap banking names. But moving on, this one is from Bisaka from Kolkata and wants to know about Fine Organics and Infosys. Is it okay to look at these counters currently for a period of about 3 to 5 years? Do you think now is the time to enter these counters, or Fine Organics and Infosys? I know both of them are from divergent sectors altogether.
See, Fine Organics is not under coverage, and for that, IT, I think investing in IT will still be contrarian, given the fact that huge spending cuts are being announced by the companies who are operating in the US. BFSI is the segment from which the Indian IT company earns about 30 to 35%. Given the constrained liquidity situation among the banks over there, it is quite legitimate to assume that they would be cutting down on the spending side. So I think for the large companies, they would find difficult to grow their revenue, and there would be pressure on the margin side also. So it is a kind of a contrarian bet. Although investing for the 3 to 5 years, it makes sense to invest only small money in the overall portfolio.
Once again, a question for you. It's from Arvind Reddy, and he's holding 20 shares of LIC from a price of 713 rupees. He's looking to average this particular counter. So the current time is a good time to look for average, or he should wait for some more correction in this particular counter. What's your view on LIC?
I think there is no point in averaging any of LIC, given the fact that the business environment will become tough for these companies, like the one I have talked about, HDFC Life. So it is better if you get any kind of a rally in LIC housing, LIC. I think that it would be better to exit from this stock.
Okay, this one is coming from Samrat and he has 500 shares of Welspun India, purchased at 68 rupees per share. He wants to know what's the way forward for this one. Let me take it to you, Hemen. What's your take coming in on Welspun India? How are the charts looking for this one? No doubt it's a tad bit below the buy price of Samrat, but what should his strategy be from your own?
A very good morning to you. Frankly speaking, Welspun has been posting lower tops, lower bottom, Welspun India, and we haven't had any significant respite. Okay, now on the flip side, we've had some 11 months of a sideways consolidation. I would now label it distribution because the stock is breaking down from here. Extremely crucial level is at 64, and we're just below that. So, frankly speaking, after 11 months of a sideways move, if the stock breaks down, it does not augur well. And I would wait for one more day because the week ends on Friday. If it remains at this level, I think a further downside seems like a distinct possibility. If parity is to be restored, we need a weekly close above 66 followed by some more price action. Not looking good. Further downside seems like a distinct possibility. Sure.
Levels for Welspun India, but the next query that is coming from Raman, and the question is for you, Saurav. He's looking to invest in some chemical counters with an investment horizon of medium term. Any stocks from the chemical space that you would like to recommend for a fresh buy?
See, it is a very tactical play. You have to keep an eye how the different chemicals and user industries are moving. What is the cost of raw material? How it is moving? What is the kind of arbitrage between the domestic prices and the prices abroad? So I think it is a very difficult sector to predict and to recommend any company. Rather, I would recommend him to invest in the utilities, for example, the NTPC, for that matter, NHPC, SJVN, which offers high dividend yield and also the expectation is that there would be a harsh summer conditions, summer weather, which would benefit these companies, utility companies. Apart from that, I think private sector banks, capital goods, hotels are the some of the spaces in which he can opt to invest.
From Akshay, he's writing to us from Dubai, and Saurabh, he has 500 shares of Asian Paint at the price of 2,999 rupees per share. His time horizon is, I believe, of 7 to 10. I'm unsure if it's months or if it's years. But should he hold or switch to a mid-cap name? On either of the conditions, in the near term, what should his strategy be for Asian Paints, and longer term, what should he do?
See, if you look at the business mechanics in the last few quarters, what we have seen that these companies are finding, especially Asian Paint is finding difficult to grow their volumes. They have been revising their prices upwards, which has led to downtrading also. And also the kind of new construction which is coming up is using a lot of glasses and the other material, which has reduced the dependence on the paints also. So I'm not expecting this industry to do well for the next several years. I would rather recommend to not, if you have it, then better to sell it or don't invest in it.
Okay, the next question is on one of the news buzzers today, the stock which is down 14%, and I'm talking about the South Indian Bank. And the fall is on the back of the news wherein Murli Ramakrishnan, the MD and CEO, will not offer himself for a reappointment. And the stock is seen to be tanking lower. Saurabh, actually, Subramaniam from Chennai wants to know, is this a good time to enter South Indian Bank? How do you see this news flow, as well as going ahead, how are the fundamentals looking like to you on this banking name?
See, if you look at the balance sheet, it is not the best among all its peers. And if you look at the operational performance, that is not the best. And the stock has underperformed largely in 2022 also. See, the outgoing CMD hasn't done too well. I mean, if that would have been the possibility, I think the numbers would have been better. So there is no point in investing in a stock where you are seeing huge amount of selling and the operational performance does not show a good strength. So I would rather recommend avoid and invest in the bigger names and the private sector space.
Again from Sandeep, and this one is also for you, Saurabh. Divi's Laboratories or Sun Pharma for the next 3 to 4 years. Which one should he look at investing in? Because today we did have Saurabh Mukherjee also on the show, who instead said that Divi's will see better future going ahead. They've also increased their exposure on that particular counter. But nevertheless, what's your take on Divi's and on Sun Pharma? If Sandeep has to pick on either of them, which one should it be?
See, only thing which has happened in the pharma space that the valuations have come off and they have come to the historical low averages, I guess. So that is why many of the people are believing that since these companies are too mature and they would definitely do well in the future. So people are talking about taking a contrarian bet. But rather, I would recommend to not to jump as of now. Wait for a quarter or two till the clarity emerges. Because as of now, if you look at the operational numbers, there is a serious amount of pressure in terms of growing their sales volumes and the margins. There is a huge amount of pressure on the margin side also. Demand is also getting settled from the US or for that matter Europe. So it is a contrarian bet as of now. I won't recommend to enter any of the stock.
Okay, Himen, Aditya has invested in 2 large cap names, M&M as well as Raymond, but he's sitting at a loss of 15% in both of these counters, though his investment horizon is for the next 3 years. What's your advice coming in on a longer term chart pattern, and can he average at current levels?
Mahindra has had a circulating run up history from 250 to 1400. I believe this move has now run its course. The longer term charts are getting a bit wobbly. The indicators on the long term charts have already signaled a crossover sell. So I can say that we've posted a medium term top, and I have a feeling we might very well might have posted a longer term top. So if that is the case, I think normally when you have such a multi-bagger move, like I said earlier, a 1 or 1.5 year correction is a normal feature, and we posted an all-time high just last month. So frankly speaking, it's going to take time. I don't see any sense in averaging. Yes, if he, you wouldn't want the investor to do trading, but if he does have that mentality and that mindset, I think currently it's oversold, downside limited. We are at 1147. We should be seeing 1200 sometime in April and more, but that's going to be a recovery, not a rally. So I think he'll get everything lower. And from a longer term point of view, it's going to take time to play out, frankly speaking.
This one is coming in from Pratiksha. She's writing to us from Muscat. Though her time horizon is 1 year, but she's asking about a fundamental reason for being invested in this particular counter, and that's IRB Infra. Pratiksha wants to know, Saurabh, that is it good to hold IRB Infra for a period of 1 year, and fundamentally, is it a good counter that one can go ahead and add on to the position?
I think infrastructure companies would continue to get benefit from the huge infrastructure program. I mean, the capex drawdown by the by the government, and also if you look at the all the infrastructure companies, they are able to garner good amount of order from the NHI also. IRB Infra, I think it's a good company, but I think I would rather recommend to invest in a in HG Infra. That is, I think. A more confident player and from the operational performance perspective, and the balance sheet is much more stronger. So I would rather recommend to invest in HG Infra rather than the IRB.
Okay, taking the next query that's coming in from Palukaru, and Himen, he's holding shares of Adani Ports, a very volatile counter, but he's holding 100 shares from a price of 886 rupees. What's your advice coming in? Would you be able to advise him? Is that a hold or exit at these levels?
I will advise him, but with a standard caveat. Every second day we have some news coming in. I think the charts will take some time to factor this out. But anyways, we're in a bounce which sort of is getting heavy. If I take a shorter term view, support comes in at 560. Recovery seems to be on the cards. Keeping everything in mind, it is one of the, I think, the probably better, if not the best, Adani stock as far as charts are concerned. So I'd wait for things to peter down and sanity to prevail. Till then, hold. It has shown some amount of resilience, and I believe it should hold. So wait for some time. I don't have a clear buy or sell as of now. Hold.
On that note, actually, we'll slip into a break on this edition of Buy Now, Sell Now. Stay tuned. When we come back from break, we'll continue taking all the stock-related queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of the stock-related queries. This one is coming from Hemant, and he has 200 shares of Tata Power at the price of 213 rupees per share. He wants to know at what level he can consider averaging this counter, because he intends to hold on to this for the next 5 to 7 years. Though it's a long-term query, but he wants to know about what level should he average. I'll take this one to you, Hemant.
Sure. 27 to 297. So it quantifies for a 2-year hiatus, so to speak, Cheryl, and that's what is happening. So yes, longer term charts do seem copacetic, but yeah, I think its time horizon is fine. There is a gap in between support levels. They were support at 190. We've breached that. The next important support level comes in at 159. So I would say you can buy some at current levels, and you can keep space to add more at 159, because there is absolutely nothing in between in terms of support. Tata Power had entered a corrective phase for 13 years, gave a breakout, posted a fresh all-time high, and this level that I'm talking about was a high posted in March 2008, Cheryl. So frankly speaking, there's a whole gap in between. Just little, let's say he wants to buy 100 shares more. He can buy 1/5 or sorry, he can buy 1/4 now, 3/4 around the 159 and below level share.
I mean, one more query coming your way. The question is from Carol, and she's looking to invest into L&T. Wants to know at what price he should enter, at current market price, or he should wait for some more dip.
Well, I have a slightly negative view on the market, so I'll say the same thing. You'll get everything cheaper. There is a 2-3 week bounce coming in somewhere somewhere in mid-April to mid-May. But after that, if we make a new high, then fine. I don't think we will. So to cut a long story short, I don't think he needs to rush. We are at around 2129 as far as L&T is concerned. Support levels 2080, 1982, 1850, 1750. So I'd say you get everything cheaper. These levels you need to keep in mind. Do it like a SIP sort of a thing. Long-term picture does look positive in a market which is slightly shaky.
One more coming your way, actually, Himen. This one is from Bhaskar Dos. He's writing to us from Tanjavur. Is it time to buy RVNL or wait for further correction?
Okay, that's quite interesting. We've had a run up, we've had a cool off, we've had a 5-month cool off, honestly. Support levels come in at 60, 56. Well, it does have bullish implication, then I think that's quite an achievement in this market. So yeah, so if you want to buy RVNL, once again, I don't think it's possible to catch tops and bottoms. So spread your purchases, even it out. I'd say you can buy some at 64, more at 60, more at 56. So do it in 3 installments, and these are the levels to keep in mind. I'll just repeat them: 64, 60, 56. After that, when there's a close above 72, we see targets of 82 and 98.
Okay, but let's move on and kickstart the rapid fire session. And the first question that I have is coming from Dr. Ravi. And Saurabh, he's looking for a fresh investment in Coal India for the long-term horizon for the next 1 to 2 years. Would you advise for a fresh investment at current market price?
Coal prices are coming off and they are making fresh lows. I won't recommend to invest.
Okay, Raghavendra from Kurnool wants to know about IDBI Bank, 500 shares at 60 rupees per share. What should he do with this one, Saurabh?
Avoid.
Okay, Saurabh, the question is from Krish. He's holding 100 shares of Grindwell Norton from an average price of 1850 rupees. Can he add more at current market price? What's your advice for this one?
You can add more, but only from the long-term perspective.
Okay, this one is from Bharat. He wants to know about BHEL entry point for the long term. Himen?
BHEL entry point for the long term, 66.56.
Okay, Himen, Mohit is holding 1000 shares of SBI from a price of 184 rupees at a good profit. Is that a suggestion to, is that an advice to book profits or hold on? His investment horizon is for the next 3 years.
I would say book some profit above 5. We'll get it lower after that. But keeping a long term in mind, book some at 5.
Okay, this one is from Divya, and Divya is comparatively a new investor, wants to know whether she should enter India Mart or GE Shipping or Varun Beverages for a period of 1 year. Saurabh?
GE Shipping would be a better choice.
Okay, Saurabh, Sunita is looking for a fresh investment in Mirza International for a long-term perspective. Your advice?
It's avoid.
Okay, Varun from Delhi has written to us on Patanjali Foods. He has 100 shares at a price of 650 rupees per share. He wants to know what should he do with this one. Look to stay put or actually book profits and exit this one. Heyman, what's your view on this one?
Hold with a stop loss of 800. Sell on bound at 1000 and 1050.
Saurabh, Ram is looking for fresh investment in Balaji Amines. Right time to enter for the next 5 years?
I would say avoid.
Alright, this one is coming from Sri Kumar Nair from Kochi. 10,000 shares of Yes Bank at 15 rupees per share for the long term. Does it even make sense to stay put with this one, Saurabh?
Better to book profits.
Okay, but with this, it's time's up on the rapid fire session, as well as it's time to wrap this edition of Buy Now, Sell Now as well. Saurabh as well as Himen, thank you so much for joining us today on ET Now, helping all our viewers with their stock-related queries. But with this, it's a goodbye from me and Cheryl and the entire team who put the show together. But the expiry action continues on ET Now, and Markets at Noon will take the action ahead right after this quick break. Stay tuned.